All right, let's just dive right in. If you're sitting there thinking the 2026 bull run is going to be a free-for-all where every single altcoin in your bag just skyrockets, well, we really need to have a chat. Because, the next cycle, it's not going to be a repeat of the last one. Today, we're going to look at a totally different playbook, the one that smart money is using. So let's start with a really uncomfortable truth, something you kind of have to accept. Most of those altcoins that are down, say, 80, 90% right now, yeah, they're probably not coming back. Like ever. That hope of them hitting a new all-time high, it might just stay a hope. It's harsh, I know, but getting your head around this is absolutely the first step to making smarter moves. And that brings us to a really simple but powerful question you've got to ask yourself. Right now, are you actually holding a solid asset with real potential, or are you just holding on to hope? Because this, right here, this is the exact point where the thinking of a retail investor and the thinking of smart money just go in completely opposite direction. Okay, now what's so fascinating about this is the complete mindset shift it shows. See, a retail investor looks at a coin that's down 90% and all they see is the massive upside, right? It could 100x from here. But smart money, they look at that exact same beaten down market and they ask a totally different question. Which of these projects are actually going to survive the next few years? It's not about the bounce back, it's about survival of the fittest. So that brings us to our first bucket, our first filter for survival. Core crypto infrastructure. These are the projects that are becoming the literal plumbing for this entire ecosystem. They're not just hype and shiny objects, they are the absolute foundation. And right at the heart of that infrastructure, you have Chainlink. Now, it's not just another project that supplies data. You got to think of it as the vital bridge that lets blockchains talk to the real world. And maybe even more importantly, lets blockchains talk to each other. It's the tech that makes a smart contract actually smart about what's happening outside the blockchain. And this chart just shows you its sheer dominance. I mean, when you look at the actual usage, it's not even a competition, it's a blowout. Over the last year, Chainlink processed about 9 million Oracle transactions. The next closest competitor, Pyth, did just 66,000. That's not a lead, that is a straight up monopoly. And of course, that kind of dominance is attracting the biggest players on the planet. In October 2025, you have Swift, the system that moves trillions of dollars between banks every single day, integrating with Chainlink. Then, in December, Grayscale launches a Link ETF that has seen nothing but money flowing in. The institutions aren't just trusting it, they're betting their money on it. So here's the crucial link. This incredibly powerful infrastructure, it isn't just built in thin air. Projects like Chainlink, they need a secure, decentralized, rock-solid foundation to operate on. And as you can see, the most dominant and trusted foundation for this whole new world is Ethereum. See, Ethereum's value proposition isn't some future promise anymore. It's about real, tangible use right now. Just look at stablecoins, which are getting regulated and adopted like crazy. Where does all that money live? Well, about 53% of all stablecoins are sitting on Ethereum. So if you believe in the future of stablecoins, you're pretty much automatically bullish on Ethereum. And this creates this incredible feedback loop, a flywheel effect. As the stablecoin market gets bigger, it generates more and more network fees on Ethereum. Now, because of Ethereum's burn mechanism, more fees mean more ETH gets permanently wiped from existence. And this creates serious deflationary pressure, making every single ETH left just a little bit more scarce and potentially more valuable. Which leads us perfectly into our next theme. Now that we've got this super robust infrastructure in place, right, a secure base with Ethereum and a data layer with Chainlink, we can start looking at the really cool applications being built on top. These are the projects that are actually building the future of finance and, get this, generating real revenue today. Okay, let's start with a really basic principle from traditional finance. It's simple. Only companies that are actually making money and are super confident about their own future use that money to buy back their own stock. It's one of the most powerful signals of financial health you can get. And that is exactly what Hyperliquid, a decentralized exchange, is doing. It has already used its own profits to buy back over $644 million worth of its own tokens. Think about that. While other projects are just printing more and more tokens, Hyperliquid is shrinking its supply, which is just a massive signal of confidence. So while Hyperliquid is crushing it in on-chain derivatives, our next project is going after an even bigger prize, bringing all of real-world finance onto the blockchain. We're talking about real-world assets, or RWAs. This market is already at $36 billion, but it's projected to hit a mind-blowing $16 trillion by 2030. And the project that's quietly building the institutional-grade plumbing for all of this That's Ondo Finance. But here's the thing with Ondo. There's a really key factor you have to watch: big token unlocks. All this means is that a whole bunch of tokens that were locked up for early investors are going to get released onto the market. Now, for a smart investor, that isn't a red flag to run away. It's a reminder that sometimes the best move is to just be patient and wait for the market to absorb that new supply. Patience is the strategy here. Now, from bringing Wall Street on-chain, let's turn to the king of on-chain trading itself, a DeFi original that just made a completely game-changing move, Uniswap. The community recently voted to burn 100 million Uni tokens, just like that. Poof, about 16% of the circulating supply, worth over $600 million, just vanished forever. So what does this mean? What's the bottom line? Well, combined with a proposal to turn on fees for token holders, this burn literally transforms Uni into a deflationary asset. Its value is now directly tied to how much the exchange gets used and the revenue it makes. The more people trade on Uniswap, the more value flows back to the protocol and its holders. Simple as that. So, as we wrap this up, what's the core idea connecting all 5 of these picks? From the bedrock foundation of Ethereum to the data layer of Chainlink, all the way to the financial apps on top, it's all about focusing on what actually matters for long-term survival and real growth. The key takeaway, the one thing to remember is this: smart money doesn't show up late and jump on the hype train. No, it does its homework and builds its positions when the market is quiet, when it's boring, when there's uncertainty, or even when there's fear. The conviction comes first, and the price action follows, not the other way around. And that really just leaves us with one final question for you to think about as you plan for the next cycle. When you look at your own portfolio, are you just betting on short-term hype? Or are you investing in projects with a real, sustainable, fundamental value that have a genuine shot to survive and actually thrive? The answer to that question is probably going to determine how well you do in 2026.